All right, so the Fed has cut rates in the last couple of months and still continuing to talk about cutting rates in the future. And it looks like all of 2025, they are going to continue to cut rates as well. As we know in 2024, we can't really rely on what they're saying, on what their predictions are, because 2024, they were supposed to make a ton of cuts and then it didn't end up happening. But either way, what does the Fed cutting the rates really mean for mortgage rates? And at the end of the day, not too much. It doesn't directly affect mortgage rates. It does indirectly affect them over a couple months of the effects of them moving the interest rate, their Fed, what's called the Fed fund rate, will eventually affect the variables that do affect mortgage rates. Really, the mortgage rates are based off the 10-year Treasury. So if you look at, once the Fed started cutting the Fed fund rate, you can see that the 10-year Treasury actually went up, mortgage rates went up. So as you start to see the Fed continue to cut rates over the next 12 or 18 months, make sure that you're really looking at the 10-year Treasury, not the Fed fund rate. The Fed fund rate will change the interest rate on short-term debt. So you're looking at credit cards, lines of credit, your car notes, anything that has a variable rate, it will affect that. It does not directly affect your mortgage rate. Now, mortgage rates are expected to go down over the next 12 to 18 months, but the Fed fund rate does not directly affect your mortgage rate.